about stocks this week. With the budget just a few days away, we'll give you an investment strategy that you can use right now. Prakash Diwan tells us why he believes Gillette India is a sure bet for the long term. Welcome to All About Stocks, a show for long-term retail investors. We've had quite a volatile market in the run-up to the budget. It's likely to be more volatile in the week to come. All the speculation that's going around. Over the next half hour, we'll tell you what your investment strategy should be in the 5 days before we hear the budget announcement next Saturday. We'll also answer the questions you sent in during the week. Now remember, our email ID is at the bottom of your screen. You can send in any question you have about your stocks. But first, let me bring in my colleague Ajay, who will give us an update on all of the action on Dalal Street.
Well, Faye, this week gone by has been a very interesting one for Indian equities. Optically, you may just see 1.25% kind of a gains on the benchmark indices, whereas broader markets may have added closer to 1%. But the highlight of the week was that heightened level of volatility is setting in. For the entire week, we've traded in a range of about 120, 130 points on the Nifty, but each day we've seen very wild swings coming in. And this is exactly what starts happening ahead of a very large event such as this particular one, particularly heightened level of expectations from the union budget. But it's a triple witching event. Just one day ahead of the budget, it will be expiry of Feb series. On 28th, some final outcome on the Greek negotiations will also be is also expected. So ahead of this, volatility is expected to set in, and this is precisely what happened this particular week. On sectoral front, a lot of policy sensitive sectors like power, capital goods, even defense on expectations, railway stocks, all of those were seen gaining pretty sharply ahead of the budget. But at the same time, there were large sectors which are responsible for big drag on the market, like the energy sector, oil and gas in particular. Even the interest rate sensitive and the big one over there, the banking sector, was seen losing this particular week because most say that the rally is overdone. We've gained almost for last 7 straight days before witnessing some correction on Friday. So a lot of factors were seen playing around this particular week. Even the flows were mixed. There were some block deals from the HDFC side, because of which FII flows looked positive. But the fact of the matter is that institutions were also participating in a very light manner. So there were not big flows both on the positive and the negative side. And this is what traders are telling, that next week, when the volatility is expected to go up even further, traders are advised to trade light, and that too with very strict stop losses. Surely one would be tempted to make calls of which are the beneficiary sectors from the budget, and may have some trading positions there, but one should trade with low positions and strict stop losses.
All right, Ajay, thank you so much for that update. Joining us in the studio today, Prakash Diwan, Director at Altamount Capital Management. Prakash, thank you so much for coming in. This is the interesting thing. I'm not going to ask you to speculate on what we may or may not hear in the budget. We do have 5 days between now and that announcement. I want you to help us figure out a strategy in the next 5 days. Are there stocks we should be looking for and adding to our portfolio? Are there stocks we should be getting out of? What's the advice you're giving your investors and your clients at this point?
So the sense that we get is the government is very clearly articulating its focus on bringing in FDI money. Any sector, any company that benefits out of infusion of capital from outside of India, be it in defense, be it in railways, be it in infrastructure, be it in ports, logistics, all of those are likely to have some other benefit. Of course, it could vary in terms of percentages and the nature of benefits. But my sense is PPP and FDI are going to be the 2 buzzwords.
All right. Let's talk about specifics. If we talk about infrastructure stocks, for example, most of the large ones, L&T, Adani Ports, BHEL, Siemens, they're very close to the 52-week highs at this point. Do you see more headroom? Because we know this is a government with a specific focus on infrastructure. Do you see more headroom for this sector or these stocks going forward in the next year, maybe? Also?
Certainly, because see, what people have done in the past 1 year, or let's say the last 9 months ever since the new government came in, is incrementally we've started adding more of these capital goods infrastructure names to the portfolio. So L&T has moved from a 1200 to a 1700. But if L&T were to get an order book in the next 3 years, which is 3 times of what it was last year, I mean, the stock has to move up much more commensurate with that. So the sense is we've still not factored in the complete benefits that these companies potentially can accrue to themselves, and that's where the surprise element could be, and it's a pleasant one. So if you've not bought into an L&T and if you buy it at 1700, the question is it going to go back to 1200? The answer is not. So it could move to 1900, which is good for you. So if you've not bought it, you could still buy into these companies because they will benefit. Look at banks; they will benefit irrespective of whatever happens.
Yes.
So if you're not bought into banks yet, I mean, what is it that you're waiting for?
Same question on construction, civil construction particularly. Yes. Again, that's a massive area that we might receive some allocations.
Oh, absolutely. I think that's my favorite too, because whatever you talk about, whichever way money comes in, whoever is a partner, finally it's the construction guys will benefit, EPC players particularly. So even if you see the road building model, the government has moved from the BOT to the EPC kind of a thing. So they don't own all, the NHI ends up owning all the roads, which they don't want. So an EPC is a much better model. So look at an ITNL, look at an IRB, look at an MBL Infra. I mean, these are brilliant companies. MBL Infra has a monopoly of sorts to, the first order that goes to a company every time a new construction starts is to an MBL. Or companies like that. There are not many in the listed space though. So you look at an ITD cementation. Today, for example, it gets an order from a new government expansion into any new project, whether it's a flyover, whether it's a new port, whether it's a new building. So ITD cementation, MBL Infra, these are brilliant companies that will benefit in the first leg of the up move. Then, of course, you have the other players from the EPC. There's a host of companies that could also benefit.
Right. The other question obviously is real estate. Now, this is a sector we've seesawed on in terms of whether or not a retail investor should allocate any portion of their portfolio to real estate. Again, housing is top priority for this government at this point. So do you believe that if there are moves made in the housing area, that listed real estate companies will benefit from it? If so, do you see any sort of value there for a retail investor?
But there are very few companies that are purely dedicated to housing in this, I mean, except for a SOPA developer or to some extent an Indiabulls real estate. But then again, they're more premium than what the government is focusing on.
The low cost, the low income
so what's going to benefit out of housing is the housing finance companies.
Okay. Irrespective
of which developer builds it. And mind you, the focus of the government is on affordable housing, which is primarily run by a lot of unlisted players. If you see, most of the affordable housing segments are catered to by most unlisted players. So, but the housing finance companies do lend to these guys or to anybody who's wanting to buy a house. So, and those are completely undervalued as compared to the kind of books they are sitting on or potentially they could be. And there's absolutely no issue on NPA in this whole segment of the NBFC's vertical. So, I think they're brilliant companies there.
Give me names.
The top is, of course, Guru Finance is never green, but people find it expensive. I don't think it's expensive. Disclaimer, I have a position in this also. But if you look at a DHFL, the way it's grown inorganically, it still has headroom to start organically growing from all the acquisition that it has made. And it's at sub 500 levels, it's definitely undervalued.
All right. I want to very quickly ask you about manufacturing. With all the Made in India talk, Make in India talk that we're having, do you see specifically, a push in any particular area, or if you were to tell your clients to buy something right now, what would that be?
Yeah, I think two areas which we could be off the blocks before anything else. One is in terms of chemicals and specialty chemicals, because we've always been on the forefront, and a lot of manufacturing value chain comes to come with output on the chemical side. And the second is renewable energy. These are two areas which we could really start, because there's captive markets, there is capabilities, everything is in place. And I think if you look at the renewable energy space, there are some brilliant companies which are only wanting scale. So if there were to be some capital infusion, that landscape could change dramatically.
All right. In fact, we asked Prakash to pick out one stock that we should be buying for the long term. Remember, this is not a trading idea. That we should be buying right now to add to our portfolios. He recommended Gillette India. I'm sure that brand doesn't need much introduction to you. It hit an all-time high this week. The profit numbers were very good for the December quarter. They were up threefold. Interesting question, though. There's been some talk about Gillette in the global market. The unshaven look is in. Which means the products are not moving as fast. Is that something that an investor should keep in mind as a sort of a risk?
Hopefully it's a fad. It wouldn't last too long. And by the time it comes to India, we'll have newer people who start becoming eligible to shave.
Right.
No, so India is a tremendous growth story for Gillette. In fact, there are certain markets where they've slowed down. Two things about Gillette which make it distinct. One is that it's a company that's always believed in innovation. What they've done is whenever they launch a superior product, they actually cannibalize the earlier one, for the simple reason that nobody else can match the superior product. So it's like they keep on moving up on the innovation chain and becomes difficult, and there's absolutely no competition. If you ask people in any market who's number 2 after Gillette, the guy will be probably right down the ladder, and there's virtually nobody. They bought out some of the people who could possibly be good enough. And the other thing about Gillette is that they have tremendous pricing power. Once you get used to using their products, it's extremely difficult to let go of that and to switch to anything, because there's no recourse, there's no alternative. And that's one of the reasons why it throws up cash every quarter on quarter. You could probably be in for a brilliant bonus or maybe a huge dividend or something, the way they're sitting on this cash. Or it could be an inorganic announcement or some sort of acquisition that they could make. So whichever way you look at it, Gillette will surprise you pleasantly every year and keep on rewarding you.
All right, so let's look at that numbers. I'm going to pull out the 52-week chart of that stock. It's gone up from 1850 to over 4,000 in 52 weeks. How much more do you expect it to go?
I don't know. So if you look at, I remember I used to buy Gillette cartridges for $60, which today I pay about 300. And I still shave the same way, but the ease and the comfort is way different. So if as earning power goes up, pricing power for the company goes up, so what's going to happen is for the same number of units sold, they're going to have a top line growth which is going to be a margin growth which is going to be phenomenal. So they're growing empirically on that and not in a linear fashion, which is what is very interesting, and no other company can match that.
All right, what's your target again?
I think I'll be surprised if it doesn't touch 10,000 in the next 2 years.
Wow, that's quite a recommendation. All right, so that's Gillette India, Prakash's recommendation for this week. I'm going to quickly try and answer some questions. Nag Satish has written in 50,000 shares of SpiceJet bought at 22 rupees. Should I hold on to that stock? Now, SpiceJet skyrocketed by about 17% on Friday after the Fair Trade regulator approved its takeover deal with an angel investor and founder Ajay Singh. Good time to hold SpiceJet?
Absolutely. I think the good time, money is finally coming into the company, and it's not just a shareholding change. And this money is going to be precious enough to revive this airlines. And they've been very aggressive on ticket sales, on growth. So I think good time should start seeing, come through the door.
Shravan has also written in, he has 78 shares of CEAT at 820 and 1,000 shares of Jain Irrigation at 87 rupees. He's a long-term investor, can hold for 2 years. Should he hold on to both of those stocks?
I think yes, he could. Jain Irrigation distinctly, CEAT might seem a bit in a slightly expensive zone, but given the kind of traction we are seeing on the commercial vehicle cycle and the exports potential, I don't think he's going to be disappointed. Maybe the growth might not be as great as it's been, but for the long term, I don't see issues with any of these.
Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Prakash Diwan is with us as well. We're looking at a long-term strategy of our portfolios. Now we have Prakash's portfolio to look at, which is a model portfolio that you can pick up and adopt whenever you want to. This portfolio was designed on the 30th of November 2012. We've been tracking it ever since. There's an overall gain of over 35%, beating the Nifty quite handsomely. I'm going to take you through the stocks. There's Gujarat Pipavav, which is up 200% since we bought it. Tech Mahindra, RIL, Cipla, Coal India, ITC, M&M and Tata Steel. Tata Steel is down a little bit. Prakash, we look at this portfolio right now, and this is also a lot of the same thing a lot of our viewers will be looking at. There are some stocks that have done phenomenally well, some not so much. Of course, the week before the budget might not be the best time to be tinkering with your portfolio, but what advice would you give someone who's looking at a portfolio similar to this one right now?
Yeah, so, I think the ones that haven't moved, let's say a Tata Steel or a Coal India, the way things are changing, and we've been waiting for these changes since a long time. So my sense is that the cyclicals will start kind of coming into the forefront. The performance will start coming up in terms of matching with the non-cyclicals that have anyways performed well. So if you look at pharmaceuticals, look at IT, autos, they've anyways done well. So we've capitalized on the sectors that did well, but you really can't predict which sectors are going to do well at what time. And that's the whole idea of a
point of diversifying.
And for in the long run, it's going to be always that it's good if all of them don't perform together, because it could also mean that all of them don't perform together. It's like the underperformance could hit you hard. my sense is the cyclicals post the budget will start taking off, and give it another 6 months, and you could probably have a very balanced performance from all around.
And if you're talking about all of that construction that we talked about in the first segment, that's going to need steel.
Yeah, absolutely. Look at any construction, any capital expenditure on the infrastructure side, steel has to be used. And Tata Steel anyways has done quite a bit to resurrect itself from the overcapacities that it had.
And since we have a government that's talking about overtaking China at every corner there in terms of construction as well, I want to talk to you about RIL. It's down 10% on your portfolio, but generally give us an outlook on the RIL stock for our viewers.
Yeah, so of course RIL has been hit by the crude move also. The inventory losses in the last quarter, the lowering of GRMs, that's all been not so great for the company. But the important trigger for Reliance has been the telecom side, and that's still to unfold. And my sense is with the spectrum auction happening now, and the way they've bid for all circles, and they're looking at aggressively getting into with the 4G launch, it could be a game changer. So finally, Reliance could also deliver what we've been patiently waiting for. So while this disappointment on the crude side is probably temporary, and things could start falling in place with the ENP or the gas procurement from the KG6 basin as well, it's the telecom that will come to the rescue. So Reliance could probably be an outperformer for the next 1 year. And it's a good time to average out or to add actually.
All right, so add some RIL to your portfolio if you're watching right now. A quick recap of the stocks in Prakash's portfolio: Gujarat Pipavav Port, Tata Steel, Tech Mahindra, RIL, Cipla Coal India, ITC and M&M. If you have questions about that portfolio, feel free to write to us. Just like Rajan has written in now, he wants to know what the view is on Barmer Lorry. He says, should I buy at current levels? Standalone quarterly profit was up 65%. Look at that 52-week chart. That stock has rallied hard. It was a recommendation by Chokalingam on this show for quite some time. But at this value, does it make sense to buy?
Yeah, I mean, it does seem expensive, but, the whole thing is there's not much of a substitute available to anybody. I mean, Barmer Lorry is the only company you go to, and I think with the focus on the hydrocarbon and the chemicals business that India would have in the next few years, this is one company that will always find itself busy enough to grow. So I don't see any reason to move out.
All right, and when we keep talking about construction, Narasimha Rao has written in 200 shares of India Cement bought at 120 rupees. Should I hold on to that stock? What would you say?
Absolutely, absolutely. I mean, it almost reached there some time back, but then thanks to the management which has chosen to focus more on cricket and less on the business, the stock really doesn't get valued that richly. But cement is like, you mentioned about some time back about construction being a favorite play. The corollary to that is cement will get used if construction is in place. So all cement players are going to be benefiting from this.
All right, K.S. Bhatt has written in, he'd like to buy IFCI at current levels. Does it make sense? We do know, of course, that IFCI plans to sell 2.5% stake in NSE over the next 15 days. What would you recommend he does with that stock?
So irrespective whether that happens or not, IFCI is another company that's been beleaguered because of the kind of slowdown in the economy. And if the government is to pump prime the economy again, I'm sure a lot of their portfolio will start breathing back into life. And that's good for a large company like that. So it could be a very good play. But be patient because these things don't happen very soon. It takes much. In fact, an IFCI would benefit much later than a lot of other beneficiaries in the value chain. So if he's willing to hold on for a year or so, he could probably make some decent money.
All right, I want to bring this up because you talked about renewable energy some time ago. Ram Gopal holds 50,000 shares of Suzlon, which he bought at an average of 15 rupees and 43 paise. Should I hold on to that stock? Now, given everything else that's happening with Suzlon, is it the best play in that renewable energy idea that you talked about a little while ago?
Well, the disclaimer is I also have a position in this stock, but it's not running up because of the play that it has on the renewable side. But given the fact that fresh capital could do a lot of wonders to this company, is where people are betting. And I agree to a large extent that if you're patient enough, it could transform into a very vibrant business of sorts, a very scalable business of sorts, whereas the rest of the companies on the listed space are very small compared to Suzlon. I mean, you have an Orient Green and a Swelec, and, they're very small compared to this. So Suzlon has its, dream run that I think has just started, but again it's going to test patience like anything. It's not going to gallop to 50 and 60 and all that very quickly, so you'll have to give it time for the business to unfold, but it's the right spot to be if you look at renewable energy.
All right, so Suzlon, in renewable energy you do recommend Suzlon? Yes. All right. Welcome back. You're watching All About Stocks on ET Now. Remember, we are expecting to hear the Union Budget announcement on the 28th of February. That's next Saturday. So this show has been about basically priming your portfolio and getting ready for the big announcement, making any changes, if at all you should. Remember, sometimes the best thing to do is to just sit back and wait for it to play out. Prakash has been helping us figure out our long-term strategies. It's time for us to look at Javed's portfolio. He sent in a list of stocks and he wants us to help him understand whether or not he should be holding on to all of these stocks. 50 shares of Sun Pharma bought at an average of 940 rupees. Hold on to Sun Pharma?
Yes, absolutely. I mean, the magic with Ranbaxy C will now unfold, so absolutely no need to go out.
Right, he also has 100 shares of ONGC, which he bought at 350 rupees. Now, given everything that's happened with the crude oil prices, what's your call on ONGC and anybody who's holding ONGC at this point?
Yeah, so ONGC is going to probably see a little bit of a ceiling at about 425, 430 levels, even if the government readies it with a lot of positives for the divestment. But beyond that, in this leg could be difficult. So we could probably wait for those 400 plus levels and book out. Well, it's very interesting. Javed has picked a lot of blue chip stocks in his portfolio. So it's an interestingly constructed portfolio. 20 shares of Coal India, which he bought at 362 rupees. Again, that's another very, very interesting stock, especially in a time like this. Yes.
Would you recommend he holds on to it?
Yes, I also have this in my model portfolio, and I'm hoping that some positive announcement would start benefiting this giant of a company. But yes, the patience has been tested quite a bit, but it could be worth waiting for.
All right, hold on to that stock as well. 100 shares of Castrol India bought at 490 rupees. Again, a very, very interesting stock. I'm sure you're going to say hold on.
Absolutely. I mean, I wish he'd added more than 50. I mean, yeah, but the good part is that people have bought into some of these shares at the right time when nobody was talking about these stocks. Before 90 is a decent level he's got in it. So definitely hold on.
50 shares of ITC at 350 rupees. Again, a lot of talk about ITC, the fact that this, the tobacco business has been coming down. They have, of course, been looking at other businesses to prop up that. Are they doing enough? Are you confident?
Yeah, absolutely. I don't think the tobacco business is going to recede at a faster pace than what they can add up from the newer businesses. So it's a very well-balanced portfolio. In fact, they'll emerge stronger and much more resolute out of this entire change. So it's a great stock, no issues.
Well, he does have Tata Steel as well, and we just talked about it, and you said hold on to Tata Steel, but I want to talk about Bharti Airtel, which he bought at 349 rupees. What's your call on Bharti Airtel?
I'm not very bullish on telecom, if you ask me. I mean, it's the most underweight sector in our allocations. And Bharti particularly has still a lot of issues related to itself. So, and when Reliance Jio comes in, it's going to find it even more difficult. So, if it's just kind of making a decent $6-7 on this. If he books out, maybe moves into a Bharti Infratel, it could be much more promising.
Conspicuous in its absence in his portfolio is any sort of finance, BFSI, housing finance. Would you like him to add something to his
absolutely.
portfolio?
Housing finance companies are the best pick right now. And even PSU banks, for that matter, some of them do offer a lot of value, like BOB, I mean, in spite of whatever has happened on the results. But a Guru Finance or a DHFL would definitely add some spike to the portfolio.
I know you've been telling us through the show what your disclosures are, but I'm required to ask you one more time. Any disclosures on the stocks?
Oh, well, quite a few that we discussed. Suzlon particularly is where I have a position. But the rest of the stocks that we discussed, quite a few of those we keep on advising to our clients as well.
All right. Prakash, thank you so much for spending time with us. It's going to be an interesting budget, and of course, we'll be tracking it for you on the show and on ET Now right here. So if you have a question about what you hear, feel free to write to us, and we'll have Prakash come back in and answer your questions for you. You have a nice weekend. Thanks for watching.